Hello everyone, welcome to the Manthan series of CAIIB. Today is the first lecture of Manthan series BFM. The Manthan series is for the YT questions, YouTube questions, objective questions, numericals, case studies for BFM for December 2025. So you'll enjoy a lot and you'll gain a lot from this. In this series, we'll be covering all the objective questions, numericals, case studies, whatever is required for each subject. I'll be covering BFM and some part of ABM, module A and C. So watch the series completely, watch all the subjects. And today being the first day, I'll start the topic with the Big Bang. What is the Big Bang? Big Bang means we'll start with Forex numericals. Numericals, case study, directly we'll be starting with case study. I'll be covering two case studies on Forex, exchange rate and Forex business. And then after that I'll be covering some theory. But first two very important numerical case studies. So don't miss even a single one. Okay, watch it completely. Importantly remember, these case studies are repeated in the exam. Share with your friends, like and subscribe, okay, to the channel. Don't miss even the single sentence. So let's start. Know the concept. That's important. See here, what is given? Look at it. Today's date is given as 4/6/2016. Okay. Find the forward purchase contract rate. USD 5 lakh. Delivery third month. See this. It's mentioned that delivery is third month. Full month. You don't know when it will be. Full month means it can be on the second also, third also, fourth also, up to last day. Not exact last day, one day before. Third month. If USD INR spot rate is 48.7850, 7950. Premium for 1 month is 2030, 2 month is 4050 and 3 month is 6070. So this is the premium and this is the basic given. Now you have to find out the rate in the third month. See here, one thing I'll tell you regarding this buy low sell high. Whenever you are dealing with any month, okay, whenever you are dealing with any month, whenever you are dealing on first day or the last day, first or the last day, that last day can be anything. That last day can be 30, 31, or if it's February then 28, 29, whatever it is. On these two dates, you will never use buy low sell high. Never use buy low. I'll just write short form. Buy low sell high, BLSH. Okay. Never use BLSH. Whenever you're dealing on first or the last day of any month. Whenever you're dealing on between second to this last but one day. Whenever you are dealing anywhere, use this. Use buy low, sell high. What do you mean by this? But buy low means, see, it's a normal business. Whenever you do any business, you'll always try to buy anything at lower rate and sell it at the higher rate. That's what is followed, isn't it? So this logic is used in Forex also. Forex is also what? Forex is also commodity. What is the dollar commodity? Whenever I buy the dollar means what? Dollar is in and I give rupees to that whomever I buy. Okay? Or whenever it's the reverse thing, dollar is sold, whatever it is. So reverse transaction happens. So understand this, dollar is after all like buying the vegetables. Whenever you go to the vegetable shop, you buy the vegetable, you give the rupees. Same logic over here. You buy the dollars, you give the rupees. Simple. So, buy low, sell high over here. So, let's move ahead. Now, in this case, you got this point, everyone. On first and the last date, you will not use buy low, sell high. In between, you will use buy low, sell high. So, now let's move on. Now, what is asked over here? You want it in the third month. Third month means what? In the third month. So, mark this here. This is the spot rate. Everyone pay attention now. This is the spot rate. Spot means today. Spot. Now you want third month. So third month means what? Starting of third month to ending of third month. I'll just write it here, third. Starting of third and ending of third. Now starting of third month means what? Starting means 1. And ending of third month, let's say 30th. We don't know. Let's say 30th. So it's mentioned in between, means full month. So we are dealing over here. So we'll be using buy low sell high over here. Now what is the starting of third month rate? So always remember, starting of third month rate is ending of second month rate. End second month. Whatever is the end second month rate is starting of third month rate. So over here, whatever rates are given, these are all the rates given at the end of the month. End. This is end. And this is also end. This is third month end. See, this 3 month means third month end. So this 60-70 rate, forward purchase we want. Purchase means buying. So this 60 will be over here. Third month end. Okay, and here what will be the rate? You tell me in the comment section. What will be the rate? It is second month end, so 40. So it is always point and point. What is the spot rate given? Spot rate is 48.7850. 48.7850. This is your spot rate, right? Because you are doing buying, purchase. Now what will you do? Here, this currency is in premium or discount? 20-30. So this currency is in premium. Whenever you have right side bigger, it is called as premium. Whenever you have left side bigger, it's called as discount. This already I have covered in other lectures also. So 20-30, this is premium now. Premium means what? Whenever you have a currency in premium, you'll always add, plus. You'll always add. So what will I do? 48.7850 plus 0.4. So give me the answer for that. 48.7850 plus 0.4. I'll also do it with calcium only, man. Isn't it? So always use this point starting from here. Okay? 0.4. Don't use this point at the end. Use it below 78, not below 50. So do it, everyone. What is the answer? 48.7850 plus, what is this? 0.4. 0.40. So it is 49.185. 49.185. And over here, 1850 it will be. So 185. What about this? So 78 plus 60. So it is something, 18 means 38 it will be. 49.385. Right? This will be the answer. Now you have to do buy low. Buy low means buy at a low rate. You are doing buying. So which is the low rate among these two? So you will be using this rate. This rate you will be using for this transaction, entire transaction during this month. Now understand one point. This is used when you don't know the exact rate. If they give you the exact rate on that transaction date, whatever, suppose it's third month, 10th, the transaction is happening. And if they give you on 10th, the rate is this much, then you will not use buy low, sell high. Not use. Kindly note, buy low, sell high is used only when you don't know the exact rates on that transaction date. Okay. So this is very important point from your exam perspective also and from your knowledge perspective also. Okay. So this was it about buy low, sell high. I told you I won't be solving. Just solve this. Solve this. I'll give you the answer also if you want. See, the rate will be 48.7850 plus 40. This, so 49.1850. Here, commission is not added. TT rate is not added. It's just a simple buy low, sell high concept. That's why I have not added anything. If there is a commission or if there is a TT margin, that will be subtracted in purchasing. Whenever you purchase anything, the TT buying rate for inward payment of USD 2,50,000. You have to find this buying rate. You have to find out. If the interbank rate is given as 49.020002 and margin to be charged is 0.08%. So now what is given? Remember, I'll move fast on this. Remember, in any Forex numerical, you have to follow 3 points. What are the 3 points? whether you have to first buy or sell, buy or sell. First, you have to decide that. Then second, you have to decide on forward margin. Forward margin. Okay. Then third, you have to decide on TT margin. TT margin. TT means telegraphic transfer. TT margin, or we call it exchange margin also. So you have to decide on these 3 points in any Forex numerical. So remember this by heart, by heart, by heart, by heart. Any Forex numerical, these 3 steps should be there. Okay. So let's look at it one by one. First one, what is given? Inward payment. Whenever you are told inward payment, it means dollar is coming in. If dollar is coming in, you have to buy. Kindly note, see this I have shown over here. If dollar is coming in, this is USA. Dollar is coming in from, let's say USA. I am giving example. No? It is coming in from USA. So it is coming to the customer, and then customer is selling it to the bank. So you are buying in, always remember, in inward remittance. Reverse is also true. If dollar is going out, you are selling it. Okay. So clear this term. Inward remittance buying, outward remittance selling. Very simple. So here what is given? Inward payment. So what will you do? You will do buy or sell. You will do buy. So first step is solved. Second, forward margin. What is given? The funds are coming in right now, today only, spot. So funds are coming in spot. So interbank rate is given as 49.0002. Margin is given 0.08. And in exam, to confuse you, kindly note, to confuse you, they will give you this rate also. 1 month and 2 month rate. They will give you. 1 month rate is given as 20-30. 2 month rate is given as 40-50. These are the forward points. Okay, these are the forward points. So they will definitely give you this. And many of you will get confused in this. You will say, okay, forward point is given. So I'll take this one. इसका कुछ तो काम होगा ही ना, पक्का होगा, दिया है मतलब कुछ तो होगा ही. Something will be there. I'll take 1 month, 2 month, then I'll take something like buy low, sell high. I'll do something like this. Remember, it is a trap. This is a trap. Remember this, you won't get this knowledge anywhere. This is a trap. Okay, you buy low, sell high, you have to use whenever you are doing any transaction. Check the first video. Whenever you are doing the transaction in between the month, your exact date is given today only. So no buy low, sell high, nothing. Simple transaction, dollars have come in, you have to follow the spot rate. So what is the spot rate? 49.0002. Which one will you take? Always remember, in any Forex, this right side is always sell, left side is always buy. So this is buy. So you will be using buy. So here you will be using 49.00. See this, I have used it. Bank will buy. So apply the rates 49.00. So now come back to your basics. The basics say that forward margin. So forward margin over here is 0. There is no forward margin. Why? Because we are doing the transaction on the spot. This is what you need to understand in the paper. Where I have to use the forward margin, where I don't have to use the forward margin. Whenever you are doing any transaction on spot, never ever use the forward margin. Never ever. Okay. Whenever you are doing the transaction for the future, at that time use the forward margin. Second step clear. Third step, TT margin or exchange margin. It is given. See this, margin to be charged is 0.08%. So what is to be done with this margin now? This margin is very simple. See, I have given it over here. Remember the word sale, S-A-L-E, sale. So whenever you sell anything, you'll add. It means what? Reverse is also true. If you buy anything, you'll subtract the margin. Isn't it? S-A-L-E, sale. Selling is adding. So whenever you'll buy, you'll subtract. What are you doing over here? Are you selling or are you buying? Buying. So you'll subtract. See this? For buy, subtract the margin. So 49.00 into this margin. This is given in percentage. Multiply this percentage with the rate 49.00 into 0.08%. So it will be 0.0392. This is the margin in rupees. You have to always find the margin in rupees. Kindly note, sometimes in exam, they will directly give you the margin in rupees. 0.05 paise, 0.5 paise, something, anything. At that time, you don't have to do this step. This step is not required at that time. if it is already given, because you are already given this rate. So now you have got this rupees. So this TT margin step is also done. All the three steps are done. So now your problem is in the final stage. Do it then. 0.0392, you have to subtract it. Subtract this 0.0392 from 49. Why 49? Because by. By means left side. So subtracted, you will get it as 49.9608. This is the rate. So your question was rate only. TT buying rate. Your question is over. Answer is over. But I'll give you something extra. What is that extra? See this. If they ask you, find the amount to be credited to the account of the customer. Amount to be credited means what? Here. Simple. Logic is very simple. I am buying the dollars. See, this is over here. This is the bank. And this is the customer. Okay, customer. So if bank is buying the dollars, see who is giving the dollars? This guy. Customer is giving the dollars. So if customer gives you the dollars, bank will give what? Something is to be given. Rupees. So bank will give rupees. So rupees will be credited to that customer. So amount to be credited will be 49.9608 multiplied by what is the amount given? 2,50,000. Multiply it. You will get the answer. 12 lakh something. What is this? 122 lakh or 1 crore 22 lakh 40,200. Such big figures. Even I can't read this. Okay. So let it be. Figures can be anything. You solve your problem. Direct rate system since long back. Okay. So this is now the overall picture. We have Bharat has shifted to floating exchange rates in 1993. Card rates are calculated at the beginning of each day based on the current market rates. These are all the guidelines from the FEDE. Okay, got this point? Now remember everyone, whenever you plan to join to do the serious studies, okay, join at the 24/7. Always join the classes through the app. In the app you will be getting 1% extra. So first download the app and then purchase the classes. Paid classes are available. Now the new batch, Increment Pro batch, is just starting. So join this Increment Pro batch. Okay? Increment Pro. Say this. Join this. Just now it has started. Okay? In fact, on 5th July, it will be starting. So ebooks, mock test, online live classes, recorded sessions, everything is available. Also note, you will be getting huge discounts right now. Click on buy now. Put the code Y432. Never forget this code Y432. Click on apply. Say this. 80% discount you are getting plus 1% extra through the app. That's why I am saying download the app first and then purchase. So net 81% discount you are getting. So don't miss this. Ebooks, mock test, live classes, recorded sessions, everything you are getting. So what else do you want? And plus 81% discount. Join us up. Okay. So I hope so you have enjoyed the session. Okay. Bye. And this was the first session. From tomorrow, session number 2 and so on. Don't miss the timings. Okay. Exam. See, basic rule remember. When the settlement of funds and exchange of currency takes place, means these are the names. See this. TOD or cash. Here we also call it as ready. See this. It is also called as ready. Cash or some books write it ready also. READY. Cash ready or cash rate or TOD rate. Okay. All the three mean one and the same. So what do you mean by this? It means that here it's very simple transaction. I will give you something, you will give me something. That's the basic meaning of settlement. Means what? Example, let's say, if you go in a vegetable market, okay? In vegetable market, what do? We give money to that vendor and that vendor gives us vegetables. What do you mean by settlement? See, X buyer and seller, right? So, buyer will give rupees, and seller will give any commodities here. Whenever I say vegetables, it means it is a commodity. So any commodity. So now this commodity, if you replace this vegetables with dollar, or if you replace this with gold, if you replace it with stocks, shares, anything is one and the same. After all, it's a commodity. So buyer will give rupees to the seller and seller will give that commodity. Now when this settlement takes place here, when the settlement is immediate, means I'll give you money, you give me that commodity immediately, then it's called as cash ready or TOD. Same day, it is also called as ready. Okay. Second, Tom. Next working day. Understand this word working. When you are working, that's called as working day. Means what? Simple example I'll give you. Means suppose if I am having, let's say I am doing the settlement today on Monday. So next working day is Tuesday. So Tom will be Tuesday. Okay. But if now tomorrow is Tuesday and tomorrow is, let's say, holiday, in that case what will happen? Then the Tom will happen on Wednesday. So next working day. So Tom next working day. Okay. Working. So remember, depending on holidays. Okay. Next spot. Second working day. Now look at this. Second working day. Don't get confused between next and second. Okay. Don't get confused. Next means immediately next. Second means day after tomorrow. See here, it means day after tomorrow. Day parso. In Hindi we call it parso. Day after tomorrow. Right? So that is second working day. Okay? And any day after this is called as forward. Means if it is second. Now if it is third working day, then it means forward. And third, if it is fourth, then again forward. If it is fifth, then again forward. If it is 1 year, again forward. So any day after the spot is known as forward. Any day after the spot is known as forward. Got it? Everyone clear? Let's take few examples. If next or second working day is a holiday in either of the two countries, then the settlement will take place on the next day. Okay, next day means next to that holiday. So what does it mean? Suppose if I am doing it Monday, transaction on Monday. So settlement is, let's say, Tom. So settlement will be on Tuesday. But what happens? Tuesday is a holiday. Either in any of the countries. Remember, either in any of the countries. It can be on the buyer side also, it can be on the seller side also, both. So settlement will take place on Wednesday. Okay. Next working day, next day. Okay. So next day means, again here it means next working day. Because if in some day, sometimes it may happen. Tuesday is also holiday, Wednesday is also holiday. Then what? Next working day. Got it? For example, spot deal is struck on 23rd of December. 25th is a Christmas day and 26th is a Sunday. Under such circumstances, value date of the transaction will be 27th. Right? So 23rd I have struck the deal and it is spot. So remember, spot means what? Spot, second working day, 24th, 25th. But 25th is a holiday. So 26th is also a holiday. So 27th. Okay. So this is the meaning of this next working day. Always remember, it's working. There are two types of rates. One is fixed and floating. What do you mean by this, fixed and floating? Fixed rate means we fix the country fixes the rate. Means, for example, let's first read this. Floating rates are determined by the market forces of demand and supply. Okay. Bharat means India, but we call it Bharat now. I insist you all call it Bharat now. Don't call our country India, call it Bharat. That's the real name. So Bharat switched to floating exchange rates regime in 1993. So we shifted in 1993 to floating rate. Now what do you mean by this? Floating. See this, fixed rate and floating rate. It means the dollar rate is fixed. With reference to some, means rupee rate is fixed with reference to the currency. Some currency, anything it can be. Generally it is dollar. Okay. There is one more rate concept, that is direct and indirect. Okay, floating and fixed means that rate is fixed, I will say, like presently you are seeing in USA, the gold rates of their currency, just check on Google. They are fixed it to $42. Whereas right now the gold rates are around 2000. Means huge. So there's a difference. Coming back, we switched to this floating exchange rate in 1993. There's one more rate system that's called as direct and indirect. Direct and indirect. Okay, indirect. Okay, direct and indirect. Okay, what is direct and what is indirect? Whenever I say, see this, $1 equals to $1 upon rupees. Whenever this dollar and rupees, whenever dollar is above and rupees below in the denominator, then it's called as direct rate. Or you can say $1 equals to, let's say, rupees 85. So who is floating? This 85 rate is floating. So that is called as direct rate. We are following this rate system. There is another rate system called as indirect. Indirect means what? 1 pound. Pound is generally written like L. Okay, and this is below. So 1 pound equals to, let's say, $1.1. So here who is floating? Here dollar is floating, and pound is fixed. Pound is fixed. Okay, so this is known as indirect rate. We have shifted